In this video tutorial, I'll show you ins and outs of debits and credits, how to record a vehicle purchase with a bank loan, trading, and down payment. I'll show you how to record transaction as a capital asset addition and long-term debt in QuickBooks Online. So I'm going to be using QuickBooks Online for this video. I'll show you how to add new accounts and master down payment, that's the money out, in the banking tab. So in this example, I'll do two transactions. First is you purchased a new car and the purchase price is $30,000 and you put in $5,000 down payment and you have a $25,000 bank loan. And the second example, you traded in your old car, let's say $5,000. So the bank balance is $20,000. In this example, 30,000 minus 5 down payment, 5 trading, old car. So in your loan balance is 20,000. Okay, and then I'll show you how to add new accounts and record the transactions. So I'm going to go to QuickBooks Online now. Okay, so this is QuickBooks Online. Okay, all right. So the first thing you need to do is you need to add new accounts. So in this case, it's you need to add a fixed asset, your auto purchase, and then you need to add your long-term life, that's your bank loan. So I'm going to add these two accounts, chart of accounts. So in any accounting program, you'll have a chart of accounts. So I'm using the QuickBooks, but any software program you can add new accounts. Okay, I'm going to go to chart of accounts. All right, so I click new here, and in this case, let's say you bought a 2022 Honda Accord, and then description is the same. So you can give description any way you like it. I'm going to select category. So the category is, this is your capital asset, fixed asset, expensive items, nice way to put it. So select this one, and next is the vehicle one. So your chart of accounts may look different when you set up, but basically that's what it is. Okay, so this is it is. So 22 Honda Accord, that's the one we're buying. Okay, so I'm gonna set up this one. So we go in here, you will see under vehicles, you see your new car, fixed assets. And the second one I want to add is your car loan, new. So let's say this is Chase car loan. If you have multiple loan accounts, then you can, to separate, you can just put some number in there. I'm just going to copy this one in here. And the category in this case is your long-term liability. Normally, you know, you'll finance this for more than 1 year. So let's see here. Long-term liabilities is in here. So loans, lines of credit, other money owed by the business. Click this one. Okay. So this is it's not short term. It says short term to be paid within a year. Long term, you owe for longer than a year. So this is a long term business loan. Click this one and save it. Okay, so if you go to chart of accounts, under long term liabilities, you will see your car loans. Right now, you haven't recorded anything. That's why the balance is 0. Same thing with the Honda Accord, balance is 0. Okay, so now the part, this how to add new accounts part is done. Now the next one is the big one. Okay, how to categorize transactions to record the vehicle purchase with a loan and down payment. Okay, so this one I'm going to be using just basic journal entry form. So in the accounting program, any accounting programs, you'll see journal entry form. So that's the one we're going to use here. The form may look different, but the basic debits and credit works the same way. Okay, so the first one, remember we put in this one here, purchase 2022 Honda Accord. You pay $30,000 for the car, and you put in $5,000 down payment, and your loan balance is $25,000. Okay, so that's the one we're going to work on. Okay, so in here, just put the date in here. Okay, so the first thing is money out. Okay, so money out is $5,000 in this case. Okay, so money out. Remember, on the balance sheet, the asset is on the debit side, and liabilities on the credit side. So your bank account, you're reducing your bank balance, so it's credit. When you deposit, it's debit. Okay, so select your account. In this case, I have a Chase checking account. So this is your money out for down payment. $5,000. Okay, now you're adding your fixed assets. In this case, we just created 2022 Honda Accord. That's your fixed asset. So you pay $30,000, right? This one is the purchase, new car, right? And now the third transaction you have is your loan. Okay, so this is the loan account. Just added the Chase long-term business loan. Yeah, this is the one. Okay, and in this case 25,000, that's your account, and we haven't created if you want to create, you can create a vendor name here. Let's say Chase loan. So this is creating a vendor. We already created an account, so if you're writing a check or transferring, making monthly payments somehow, you can use the vendor name as a reference. And so this one, you purchase new car from somebody. So let's say LA Honda dealer. So this is also a vendor. This is basically one-time transaction, probably, unless you buy another one next time. And Chase car loan, this is a vendor name. You'll be making monthly payments, so you will have more transactions on this one. Okay, so as usual, debits should equal to credits. So $30,000 debit, $30,000 credit. So once you save it, it should accept it, right? Okay, we'll save this. So now, if you go to your chart of accounts, you should see $30,000 is your fixed assets, and long-term debt, which is your okay, should have put it in here. Okay, second here, I'll move it. see here. Chase card loan, this one here. Okay, easy to fix it. So now if you go back in here, it's in here, it should be in here. Okay, $25,000 in here, $30,000 in here, and the money came out from your bank account from here. Okay, so that part is done. And now the second one is the other one is the categorize transactions to record a vehicle purchase with a loan, and in this case you have a trade-in. You trade in your old car, and the down payment the same. Okay, so let's do the other one. So let's look at your journal entry again. So you can write a new one. In this case, I'm just going to edit the one we did. Okay, everything the same except your loan balance is different. It's $20,000. All right, this is the loan, new loan. Okay, and so now it's $5,000 off. So it's basically you traded in your old car, and it should be on your balance sheet as fixed assets like we have in here. Let's say I have old car in here. Okay, I'm just going to use this vehicles account. Okay, so 5,000. This is for the trade-in car, and if you have trade-in car. Okay, this is the old car. Trade in your old car. Okay, so it's everything the same except you know, in this case you have you have a different loan balance, and then you added trade-in. So this is how you do it for the second example with trade-in uh, and down payment. Okay, so I'm going to save this. Okay, and now the other one, let's see here. Okay, and how to match down payment. So this is for the QuickBooks only. So if you go to the banking transactions, it will download all your transactions, and it should match with this entry in here. See, down payment. So when you from your bank feed in QuickBooks Online, you don't need to do anything. You just need to match it, conform it. You don't need to add new transactions because you already did it by writing journal entry. If you add it again, then basically you're creating a duplicate transaction for the same transaction. Okay, I'm going to confirm this, and that part is done. Everything done. Okay, so now let's see in here. What's the other one here? Okay, how to record depreciation expense. Usually your accountant and tax preparer does that when they do your taxes. So you don't need to worry about it. They will do it for you. You just need to tell them I bought a new car and it's on the balance sheet already, and let you handle it. Okay, but I'll show you how to write journal entry if you are doing it yourself. Okay, it's very simple. So journal entry, it's basically you expense your uh, you know certain the amount you paid, like $30,000 over certain months. So depreciation expense right here, depreciation expenses, let's say uh, let's see how much, let's say $1,000 a month, and expense, and the other side is your cumulative depreciation account. Cumulative depreciation, in this case I have that one, so in this case it could be different things. So let's say you started using this car in July for the full month, let's say $1,000 a month. So this is your July depreciation expense. Okay, so save it. That's it. That's how you do zone entry. I'll show it again. So debit depreciation expense, and you credit your vehicle, your cumulative depreciation account. And when you sell this, you have to remove all your fixed assets from your books. So that's the part you need to do. Remove all your fixed assets, and if there's a profit, then that's your or loss. That should go to your uh, income or loss. Normally, it's other income or the other expense type at the bottom of your P&L. So that's how you do it. All right, to get more insider accounting and bookkeeping tips, make sure to subscribe to our YouTube channels. We have two channels. BP Controller, the one you're watching, and the other one is QuickBooks QBO. Thanks for watching.